In some more interesting institutional adoption news, NYDIG cuts Bitcoin fee to 0.3% for investors as Morgan Stanley opens the floodgates. Now, the main reason for this is because there are more and more and more and more large institutional funds and brokerages that are offering exposure to Bitcoin and broader cryptocurrencies to their clientele base, so much so that there is now more so direct competition with these different entities trying to undercut each other in the price so that they are seen as a more attractive option for the customers out there. So in a press release on March 24th, the company confirmed that effective immediately, its access fee had been reduced to 0.3%. Now, the moves comes just days after NYDIG's FS Select NYDIG Bitcoin Fund became one of 3 products selected by Morgan Stanley to be offered to its wealthy institutional clients. A potentially timely maneuver, the fee reduction may have consequences for competitors, notably the Grayscale Bitcoin Trust, management fees for which currently cost clients 2%. All right, so we're talking about 0.3% times 3. That's not, so we're talking about like 6x more expensive to go through Grayscale Bitcoin Trust than it would be to go through NYDIG's option that they've created in partnership with Morgan Stanley. Now, NYDIG's new pricing structure is 50 to 75% lower than comparable passive Bitcoin access products available to investors. Critically, 0.3% represents the true total expense ratio of the fund, including a Big Four audit and legal, custody, and accounting fees. Now, this is very interesting that they are taking this approach of effectively saying, hey, we've done the math and we're going to offer this effectively at cost is what their fee is going to be. And so effectively what they're communicating is that the structure at present with this fee and what their fees are for their audits, the legality, custody, accounting, all this other stuff, this product is not really designed, or the fee rather, is not how they make their money. That is not a profit mechanism with this particular product. Now, I'm not saying they're not finding a way to profit off of this, but at least from the fee perspective, it seems, if we were to take what they're saying at face value, that they're not using the fee as the profit generating mechanism. Now, as Cointelegraph reported, competition from newcomers forms one explanation as to why GBTC's premium has fallen into record negative territory this year. At one point, the premium offered a 15% discount to spot prices for shares in GBTC. As of March 16th, the most recent date for which data is available, it had recovered to around negative 5.3%. Now, continuing, NYDIG executives built on the sense of anticipation. Prior to the Morgan Stanley announcement, Gutman had revealed that the coming weeks would see a slew of game-changing adoption moves from the institutional sphere. Expenses matter, and that will not be our last fee reduction, founder and executive chairman Ross Stevens commented in the release. Further, as Bitcoin's sound money advantages are more widely understood, I believe it is only a matter of time until U.S. dollar depreciation causes Bitcoin's market cap to surpass that of gold. So it is fittingly symbolic that NYDIG has now made the total cost of Bitcoin access 25% lower than the total cost of gold access. Now, gold has seen further slights from investors this week as CNBC host Jim Cramer conceded that the precious metals performance had disappointed him. Bitcoin, on the other hand, had made him a ton of money, he said. A lot of people were saying it, man. I'd mentioned it to a few people. But that's the thing. Before something really materializes or manifests, that's being an extreme amount of confidence, but there's also just the reality that, all right, until it is so, it could always change. And 2020, there was a lot of sentiment that like, yo, the institutions are coming. Ralph Paul, he was really, really pushing that message. And he's someone who really made all his wealth in the macro space. He didn't start out a cryptocurrency proponent or investor. And so when you see people who run corporations like this, who run firms, companies like this, come out on record and say things like, oh yeah, there's going to be a massive move from institutional adoption, that's basically like the green light, you know, where I see it. These people, they know each other who run these different firms and these organizations, you know, and they're talking to each other. They're sharing sentiment. And so once one person kind of spills the beans and talks about it, to me, that's a signal that it's all out in the open, and everybody's launch is more or less imminent. And there was, let's just call it, agreement to go ahead and let that information be widely understood, because a rising tide raises all ships. Isn't that what they say? So just keep that in mind as you notice that a lot of these moves are happening at the same time.